Hi, I'm Dr. James Roby, Global Head of Environmental Sustainability at Capgemini. Please let me add my welcome to you to today's event. We all know that most multinational organisations are acutely aware of their responsibilities towards the environment. And at Capgemini, we're no different. We started putting our own sustainability programme in place now over 15 years ago. We were one of the first to set science-based targets back in 2016, and since 2020 we've been committed to becoming a net zero business. However, as a professional services company, we recognise that our carbon footprint is relatively modest compared to many of our clients. Consequently, alongside our own decarbonisation commitments, we've set a target to help our clients reduce their carbon impacts, and we're now systematically embedding sustainability across our entire portfolio of client services. As part of this programme, this year we've launched our Future-Proofing Innovation event, a series of roundtable conversations across different sectors and countries. Together with clients, partners and other leading thinkers, we're discussing the crucial role that technology and innovation can play in sustainability. Clearly, the financial services industry is going to be crucial to the transition to a low-carbon future. Whether it's providing the capital for the transition or ensuring the ever-increasing risks linked to climate change, without innovative financial solutions, the transition will be impossible. That's why we believe this conversation is so important. So today, we've gathered together a selection of leading experts, industry players and innovators to discuss this critical topic of future-proofing innovation. I do hope that you enjoy the conversation.
Well, welcome to the Future-Proofing Innovation series. This is a series of kind of discussions that we've been having across Capgemini with some of our experts and with some of our partners and, of course, some of our clients around the intersection of sustainability and innovation. And we've been doing this sector by sector. So we've already had successful sessions across automotive, CPRD, high tech, and today we're here to talk about financial services. I'm really excited about this topic. Financial services is a bit unique. I think probably the automotive and high tech and CPRD focused a lot around how to reduce an institution's carbon footprint, which is important for financial services. But financial services is a bit unique because financial services is really what, drives the investment and drives the, risk prevention across society. So when I think of sustainability in financial services, I really think of topics like resilience and having better, risk prevention and risk mitigation. I think about topics like the transition. I think about transparency in terms of data and more data. And all of this just requires an enormous amount of transformation. And at the heart of every transformation is innovation. So I'm looking forward to the conversation tonight. Okay, so I have a great panel with me tonight. First up, I have Toby Petrocelli, who's the Director of Environmental and Sustainability Management at MUFG Americas. I also have Stacy Brown, who's the head of Global Tech and Innovation at AXA XL, and a group of AXA, and also the founder of InsurTech Hartford. I have Matthew Segal, who is responsible for driving ESG, sustainability, and digital growth at Microsoft. I have Sankar Krishnan, who is an executive vice president here at Capgemini and head of digital assets and fintech. And I have Stacy Levine, who is also from Capgemini and works with many of our insurers through our Capgemini Invent group around topics such as sustainability. Thank you, everybody, for being here. So let's get started maybe just by talking about some of the trends that relates to sustainability within financial services. And Sankar, I'm going to start with you. What's your perspective on the top trends within FS as it relates to sustainability?
It seemed like just yesterday, Larry Fink of BlackRock started this big movement in terms of being ESG friendly. And boy, has the movement taken a complete turn with one of his activist companies not so happy with what BlackRock is doing. But on the question of trends, I think the first trend is a continuing trend. And that is that a lot of chief sustainability officers like yourselves that got appointed are now focused on developing the teams that would give rise to the new way of measuring and managing things. And in order for that to happen, we need a lot of data. So banks around the world are creating enterprise-wide data systems so that you're able to port everything in one place and take action, corrective action by measuring what is good, what is not good, what is failing. So then you're able to define a data strategy to getting things right. Thirdly, we are seeing the onset of a lot of regulation. Most of it today is self-regulation, but also people like the Federal Reserve are watching what the banks are saying. And I think those are the three big trends, I would say.
Great. Toby, what response to these trends are you seeing at MUFG?
Well, specifically to the point about regulation has been probably the biggest trigger or pressure point for us. Compliance is a critical aspect. Our controller is interested in knowing exactly what we need moving forward as far as our annual reports now, which will most likely include what the SEC has put out on the table. So climate-related financial risks, as proposed in the SEC report, will most likely go into effect second quarter of next year. With that, we are actually keeping a keen eye on our other regions as well, learning best practice from some of the reporting that's gone on in the EMEA region. For instance, other activities that have gone on in APAC, as well as other parts of the Americas. So critical to understand best practice, what the standards are, what those disclosures regimens need to be. And so I think that's a huge, huge element that part of the teams that we are standing up now, which are growing, no question. We probably went from a handful of people to over 50 people in the last several years globally, dedicated to sustainability efforts. Sustainability has really become a core competency of our bank. We are committed to empowering a brighter future. And in doing so, we're going to understand exactly what those disclosures mean, both for our clients as well for us. We've created a very significant commitment to be net neutral by 2050, not just of our own internal operations, but our corporate clients' operations. So our financed emissions, scope 3, category 15. This is a massive undertaking. And in doing so, we need to make sure that we understand exactly what's implied through those markets and how we can best transition our clients.
Yeah, a big undertaking. Stacey, are there any trends specific to insurers? I mean, insurers are bearing a large brunt of the weather-related claims. What are some of the trends specific to insurance?
Well, yeah, certainly in the property casualty space, property loss from the effects of all the weather and events that are happening because of climate change is definitely one of them. And so we're seeing a lot of carriers looking at things and saying, hey, the models that we've had for years to predict loss are really holding up because they didn't really account for this concept of climate change. So now they're sitting there and they're trying to think, well, where do we get that data from, and how do we accurately predict it? And similarly, the you can't manage what you don't measure thing. There are a lot of frameworks out there, right? So I think there are a number of carriers in the industry that are trying to figure out, like, how can we come together to have some kind of standardized way to report on our industry and our progress on being green. So that's definitely something else that's happening out there.
Matthew, anything you'd like to add from a trends perspective?
It's a really great question because we're in such a transitory kind of journey right now that there are trends hitting every industry all over the place constantly. And financial services, to your earlier point, is kind of sitting at the intersection of it. The trends that I would say that's impacting financial services the most are really the data trends. There's a mountain of data out there, very high volumes. I talk to financial services firms a lot, and they say, we don't need more data, but what we really need is higher quality data. And so from a data perspective, I think that is the top trend around this space that I see because it informs every decision from product development, to your point, to where to invest, where to lend, how to insure. Getting that quality data is really the biggest trend, I think, out there right now.
Stacey, anything you'd like to add?
Sure. So from the insurance perspective, when we talk to lots of clients, we're hearing a lot of noise around we're not making enough money when we give green discounts and products and services aren't meeting the needs of our customers. So there's a lot of thought into how can we hyper-personalize our products to really meet what's happening in different geographies and different zip codes, especially on the property and casualty side. We're hearing also, thinking about what's the impact on the life insurance side with life expectancies and the planet and the state of affairs there. So there's a lot of moving parts around how can we make money without discounts, and how can we try and not also drive up our prices, but have products that really meet the demands of our customers.
So let's shift gears into innovation for a greener future. And Matthew, I'm going to start with you. What type of investments are you seeing in, innovative and newer technologies around, ESG? So things like blockchain or real-time data, AI type of investments?
It's a great question. I think it starts with the trend I pointed out earlier around data. A lot of investment firms use things like ESG data aggregators. A lot of insurers use climate risk models. But what we're seeing in financial services right now is a lot of focus on disclosures, which are, it's metrics and it's data. The forward-looking things that I think are coming are analysis around the ESG metrics that are really more material than just the GHG emissions, because I think financial services companies are waking up to the reality that every company has a material role to play that only they can play in this transition. And so the tools that they're going to leverage to do this are artificial intelligence. They're going to leverage tools like blockchain to really build a secure data supply chain all the way from raw source materials through the corporate where they're investing, all the way up to either the ESG data aggregators or the capital markets firms. And even to Stacey's point, things like insurance is going to start intersecting with this in a little bit different way around climate risk modeling. Those models, I think, are largely today kind of nascent, at least from, looking forward 100 years, 150 years. And they're more focused on kind of like extreme weather probabilities right now. I think we're going to see vastly different climate models hitting the insurance space. A lot of it's going to be built on the cloud. A lot of that technology doesn't exist yet, but I'm optimistic that it will come to fruition and that we'll see a lot of great innovation over the next 3 to 5 years.
Yeah. Great. So, Toby, there's a lot of policies and regulations emerging. How are financial institutions such as MUFG how are those making it easier, or is it making it more challenging? Like, how are financial institutions responding to that? How is MUFG responding to that?
One of the critical aspects, and also just to work a little bit off of the point earlier, is looking at technology and how to understand the policies and the disclosures that are coming out from the corporates we finance. So if we were to segue and say, well, we really are interested in financing this particular client, we run a very extensive enhanced due diligence process that includes environmental social risk assessments. During that process, we will reach out to various vendors we subscribe to that use machine learning or AI to aggregate controversial data, potentially high levels of reputational risk that we can obtain from those services. And with that, we then in turn calculate a scoring and we rate these borrowers essentially based on some of the most negative news that may have come out of, really the news circuit. Essentially, you can't capture all of it. It's not always on Google. You need to dig deeper, especially when you have international clients and global scale. So another critical aspect is utilizing that data and that machine learning capability to give us the insight on whether or not we feel prepared to lend at that juncture. So, and if we so choose, we then look deeper into their sustainability reports, their environmental assessments that they've done. We look at, obviously a lot of qualitative assessments that go on around how they operate as a business. What are their transition plans? What are their carbon neutral goals if they've set them? And then we work alongside them. If we feel we are comfortable to lend, then we discuss directly their transition plans and in turn hope to, initiate potentially a KPI that can help them on their reduction pathway.
Sounds great. Stacey, what are leading insurers doing to accelerate towards a greener economy?
So I think what we see happening in the insurance space is they're not necessarily always in the forefront on the circular economy, but there's a lot of opportunity to leverage the likes of other industries. HP around, their material cycle, leveraging what they're doing there instead of downcycling, really expanding the life cycle. We're seeing a lot of movement to the cloud or ideas about moving to the cloud, even their core platforms that are older, figuring out how to upgrade that and really make sure that their data centers are in line from an energy perspective. There's also a slice where they're rethinking some products around the supply chain overall and how they work with their commercial consumers and really thinking about how can we build in new risk models to support them.
Stacey Brown, can you talk a little bit about some of the innovations that AXA XL is adapting?
I think one thing in innovation itself, the process of innovation is not very innovative, right? And it's kind of been the same way forever, but it's not about what you do, it's how you do it. And I think probably one of the bigger things about our organization is adaptability, right? So I think was it Darwin that said, it's not the strongest and it's not the smartest that will survive. It's the most adaptable, right? And so if we've been good at anything over the years, it's change. And with the times being what they are, change being very rapid, and being now entering this transition economy that we're all being a part of, it's going to be very important, very helpful skills to be able to adapt to change. And innovation plays a role in that.
Great. Sankar, what are you seeing in terms of innovation and new business models with the clients that you're working with?
Yeah. So first and foremost, as a response to this, as you know, Satish, we launched the digital asset practice at CAP, where we are using, you referred to blockchain, we are using the science of the blockchain. So we do a lot of initiatives, for example, for a fish company in terms of farm to the table, so you can identify. Now think about putting this on a blockchain, and then banks are saying, how do I finance this? Because now we are giving them a window on the blockchain to kind of see for themselves what happens. So let us say you're a farmer's market in Massachusetts, right? And then here's a way in which you can demonstrate to your bank that you're progressively being green. So that is one example we are seeing. The same thing we are seeing financing in the healthcare industry, where a lot of the operations due to COVID could not happen on time. So a lot of the hip replacements and things like that got moved to a later date. And what we are seeing now is the science of the blockchain actually trigger that supply chain. I think a lot of retail banks are coming up with the sustainable cards, which are actually working very well with the youth population and segment. And this whole concept of creating a digital asset eliminates the need for paper. One of the emerging examples that I'm very excited about is that even when you establish someone's credit score, is there a way, if he's a pro-green person, that behavior can give him a better credit score? So automatically he qualifies for better lending terms. And think about it, if you're a small and medium business that don't have access to all the capital, but you're able to demonstrate this good behavior, then how do we as banks give you a better credit score so we can lend you better? So those are some, I can go on, but those are some of the things that we are seeing on a daily basis.
That's great. So shifting gears to challenges. So we've talked about trends, we've talked about innovation. Now there's some challenges maybe to talk about here. Stacey, I'm going to start with you. What are some of the key challenges that you see within the insurance industry, and how is this impacting end customers?
Well, I think if we take a look at the auto industry as a good example, right? So in response to climate change and the need to reduce CO2 emissions, a lot of car manufacturers, actually all the car manufacturers, seem to be picking up some kind of electric vehicle, right? So the thing is that there really haven't been enough electric vehicles out on the road that have really good risk profiles of them, right? And the loss profiles are very different. So if you think of risk as severity and probability, right? The frequency might not change, but the damage to an electric vehicle is quite high, right? You lose a battery, you might total the car.
Expensive parts.
Yes,
Yeah.
exactly. So, so the insurance industry, we don't necessarily have enough data on that yet. In fact, the rate at which manufacturers are introducing these new vehicle models, we don't even know that they're electric cars. Sometimes we see a Hyundai Genesis, and it's a Hyundai Genesis. Or actually, that's two different brands nowadays. But you know what I mean, right? We don't actually have the data to know exactly what's in that car, and therefore the models are, they need to change, and that's definitely something that we're struggling with. And I think the way that's also impacting consumers is, well, just in general, if insurers operated at a loss, we wouldn't have insurance, so that would be bad. But in order for them to maintain profitability, if these costs are going higher, not interest rates, it's raising premiums and insurance rates. So those are the ways that some ways that I see.
We all have raising interest rates on our minds these days.
Yeah, sorry.
That's okay. Toby, maybe you could talk a little bit about some of the policy and regulation challenges that are impacting your progress, and kind of how does that impact you in terms of meeting the demands of your customers as it relates to, kind of sustainable products and services?
Well, I would say probably the backlash against ESG in recent news has been, it's disheartening to me, to say the least, from a personal perspective. Sustainability is about being a better business. better for your communities, better for all stakeholders, better investment returns. To politicize this has been slightly hurtful for some of the active investment theses that have been in the market that have taken ESG as additional factors to create better and more informed decisions, whether they're selecting stocks, or really devising new underwriting guidelines. The idea to eliminate or to think that incorporations of ESG or climate awareness is a negative or something in which it would actually deter returns or create, let's just say some red states willing to pull out, public pensions from some of the largest asset managers in the world is quite frustrating. And us as financiers, we're not looking to take sides with anyone. We're trying to make the most informed decision. We're trying to lend to all asset classes. We do have a portfolio in the power and utility space, in the oil and gas space. We are working with our LNG clients on their transition. It's a transition fuel. Without it, we'd be sitting in the dark right now. So it's important to acknowledge the reality that we're here to work on and work as well as align our interests with the interest of our clients and to continue to be that partner. We look at it as a slight challenge, but it's also an opportunity for us to expand our horizon, expand risk appetites, and really think more holistically about what would be best for the economy and how we ultimately get to the net zero transition we're all looking to achieve.
Yeah, I like how you keep coming back to the transitions. That's great. Sankar, what in your opinion are the top 3 things that organizations, financial services organizations, can do to drive sustainability through innovation?
Yeah. First and foremost, I think at the highest levels of the leadership, they have to articulate what they really want to do. I think sometimes there is a tendency that some of the world's top companies may say something, and then some of the not so large companies may borrow the same ideas, and they may or may not be pertinent. So I think as banks, I think it's very important to define what exactly you want to do, so that way there is a lot of ownership at all levels. The second part of the thesis is that I strongly believe that the ROI is net positive with sustainability. Maybe not on day zero all the time, but it eventually gets there. So how do you choose the kind of products that you will define as sustainable? So an example of that is this whole supply chain financing initiative that is happening, because there's a lot of large US companies that buy from China or any of the emerging markets. And those are small shops that don't have the ability to be ESG certified. So how do you then extrapolate the supply chain work you do to make sure that they are taken care of as well, and then you create a separate fund to lift them up and so on and so forth. So that is the second type of thing that banks have to do. And CAP has an initiative with Snowflake, for example, that creates one version of the truth that can be multi-tenanted and so on and so forth. Then the last but not the least, I think, how do you report success, however small it is, and communicate it to your shareholder base and everybody? Because oftentimes now, as you were saying, there's a lot of good work being done, but there's a lot of critique that develops. So I think it's very important to take small successes and have a very proper way in which you're communicating. Because sometimes you may use the blockchain to do things, but then you have to also calculate, is that blockchain initiative more energy efficient, less energy efficient? Yes, it saves some costs on this side, but then it increases some costs on that side. So how do you communicate that the net positive of each of those and to take that?
Yeah, there's some optimization with these innovations, right? Stacey, what are top insurers doing to meet some of these challenges?
Yeah, we're seeing a lot of investment in innovation, actually. I think IoT is a big one. We talked about the auto side, but it's also on the home side and, commercial buildings, making sure that, smart devices are installed, and I'm making sure that customers know how to use what they have at their fingertips. There's a big investment on education on those products as well. You can stop a flood before it happens. In an earthquake, you can teach people how to close their valves more quickly. There's a lot of different initiatives that are taking place. But I think investment in like IoT products with insurtechs that have, clean and scrub data that's recent on, coastal areas or flood areas is really beneficial, because to the point we were talking about earlier, there's a lot of data out there, but it's how you use it, right? So being able to hone in on the right activities and from the right devices, on smart devices that you're using, is a big area that we're seeing some insurers go down as well. They're also thinking about servicing a little bit differently, positioning, in the agent model, having them really be advisors and starting to sell ancillary products that are preventative in nature, right?
Yeah.
Can I add on that a little bit?
Please.
So from the IoT perspective, I don't think we've seen as much of a lift or an impact on the home side as we've seen on the auto, right? So pay per mile, pay as you use, the whole idea for Uber drivers to be flipping the app to get personal use rates versus commercial use rates when it's the same vehicle. Like, we've seen a lot of creativity. On the homeowner side, we're not seeing quite as much yet. And the opportunity is there. Is it education that we need? I'm not quite sure yet, but there's still a lot more upside on that side. I just wanted to add to that.
Yeah, it's a good investment area, I think, and
Yeah.
be a leader in the insurance space if you probably want to really take action there.
It could really help from a resilience standpoint, for sure. Yeah.
Yeah. Well, one call out, Satish, was all our Barclays colleagues, for example, in the pillar of people sustainability. What we have done is tied up along with Barclays with a few universities in the UK. So we have made a forecast in terms of what sustainability is going to look like 5 years from now, and what is the type of talent that we need to help us get there. And together we are working this very well as a
Great.
people sustainability.
Yeah, an innovative way to think about the next level of talent. That's great. Did you have something you want to add?
Yeah, and just to add to that as well, financial institutions, ours being around 360 years, we have a little under $4 trillion in assets. A tremendous amount of bankers and relationship managers handling that portfolio, many of which are interested in this topic and really looking for more education as well. And so we've stood up as a sustainability office a training program for all of our managers and all of our relationships to really develop an understanding not just of climate risk, but how it impacts the bottom line, right? Bringing that entire loan life cycle to become more embedded with ESG. So that's everything from the onboarding of a client, understanding what's necessary, whilst pitching clients, all the way down to what the opportunities are around transition financing, KPIs that could help them reduce their carbon footprint or waste or water for that matter. Other areas also in DEI and social, so we elevate that activity as well. So all of these pieces are then taught through a series of trainings that get spent, that get broken out through the quarters. We've also done executive committee trainings, so bringing it to the upper level of the company to bring awareness there, as well as our board of directors. So all of these individual trainings have helped enhance awareness, buy-in, and really bring full circle the opportunity set that climate net zero activity has really brought to us.
Oh, that's great. A couple of good call outs on the talent perspective. Thank you. Did you have something you wanted to add at the end? No?
Oh, I was thinking about
like
the
you were gonna
training.
say
I was thinking about the
something.
training bit.
Yeah.
Because definitely it's something the company that I work for does a lot. We have a whole climate academy actually, and with work that we've done, training is the biggest bang for the buck, I guess you can say. And you can break training down into three areas. One is with your internal colleagues, right? Number two, with your stakeholders, whether they're your clients or your partners, your suppliers, distributors, et cetera. And then the third, just being the general public, right? So there's still so much education needed around climate change. And that's probably the biggest thing. And it's not insurance. I think everybody could probably say it's definitely an opportunity. So glad to hear that you guys are doing the same.
Yeah. Matthew.
Yeah, at Microsoft a couple of years ago, we started seeing certain talent gaps around technology. And so we started a cybersecurity initiative, and then we started an AI business school. And just a few weeks ago, Brad Smith, our president, announced the Sustainability Skills Initiative to try to educate the public, because there definitely is a sustainability talent gap. And if you can't get the talent into corporates, into financial services, it's really difficult to make the impact that you're looking for. So I'm just wanted to mention that because I'm super proud of that effort.
Yeah, no, that's fantastic. Great. So we're going to kind of come into the home stretch here, and I have 4 questions that I'm just going to kind of bounce up in the air, and whoever wants to comment can comment or answer. The first one, how can financial services companies influence the market to lead the way toward a more sustainable future?
So I'll start and working for. So we spoke about this credit scoring, right?
Yeah.
I think that would be something if each of the financial institutions and banks implement that. It's going to have mass impact, and it's going to be a new way in which credit is given to a lot of people. The second I like is because I have the fintech, as you said in the introduction, is the whole way we, as banks, we look at the fintech ecosystem, right? So in looking at that ecosystem, there is a lot of very interesting ideas around. For example, there's a lot of EV, but then how do you dispose of the battery and the new technologies that are coming? And how do you give those more ESG weightage than your investment in some other startup, right? Similarly, there is a lot of initiatives around climate prediction and so on. And then how do you kind of, before bad things happen, how can you create early warning? And then if bad things happen, unfortunately, like what we see in Florida, how can you have enough data so that the government doesn't build in the same place so that the same disaster is going to happen yet again, right?
Yeah, or help people recover more quickly. Yeah, exactly. Yeah.
And then this entire startup ecosystem has to be seen with a ESG friendly lens. So even when you look at things like, obviously, all of us around the table work with all the cloud companies, data companies, hyperscalers. How do we kind of make sure that each of those engagements also are carbon positive? So those are some things that financial services are really embedded in, and I wanted to pass it on to you to see if there are others you see.
Actually, Sagar, I wanted to poke at something that you said though. You were talking about the credit score, and maybe this is just the insurance guy and me thinking about it from a risk perspective. I think of it a little differently. I think it could be interesting if we could figure out a way to model behavior around that in the underwriting process. But I wouldn't put it towards a credit score, because credit is about your ability to repay your loans, all right? But in an overall underwriting perspective, it may be a good factor to consider.
But credit, as you say, is the ability to pay and the willingness to pay. But if you can add a ESG component, then if there is a correlation which can be established that if you're ESG friendly, then you're also a better credit person. Then we can see if those scores can be added on, and like a new way of hybrid scores coming in, right? Like you take the traditional score, combine it with the social media score, and then create a hybrid score. Is there a way, like each of us have apps that can measure our footprint? And if that is true, why don't we feed that score into the ability to pay, willingness to pay, and better ESG? And the blended aspect of that could be pave the way for a better tomorrow.
Well, I think there's a little bit of a fatigue around the questionnaires and the requests that come from a lot of the ESG scoring, rating, and agencies that we do have today. And there's a lot. So, what I would be great to see is a consolidation of what those questions are. So whether it's DJSI or CDP or Sustainalytics, Azure, MSCI, S&P, can everyone just ask one set of questions?
Yeah.
Send it around, share it amongst yourselves.
Yeah.
Put it on the cloud with Microsoft. But do something that allows that to be a one streamlined, simple process, makes our lives a lot easier. And again, now you have a comparable piece of information.
Yeah, I think consistency and transparency throughout that whole process would be very helpful.
Like the Common App for college.
Like the what? Oh, the Common App. Yeah, there you go.
Yeah.
Exactly.
One thing I wanted to call out is that with this infrastructure bill that is happening,
yes,
there is a lot of emphasis on clean buy, clean code, and so on and so forth. So as banks finance these things, there is a ESG score that kind of comes in if you're going to get paid by the government or reimbursed by the government, and that I wanted to call out as a very good thing.
Yeah, there's a lot of good things in that bill. Yeah. We talked a little bit about some of the growth opportunities. Do you guys have any other ideas around some of the bigger growth opportunities as it relates to sustainability?
The IRA, right? So the Inflation Reduction Act is obviously coming into full swing now. We have a lot of clients asking about this. We deliver presentations. We read a lot of market research on this. We have an entire team dedicated. We've issued over 12 publications in the last year just on ESG activities, trends, and what's happening, one of which, of course, is the IRA. I feel like it's going to be an enormous growth opportunity. It's the largest climate bill we've ever seen. And with that comes, a massive amount of momentum, from private capital. So when they see there's an opportunity for a client to access tax credits, subsidies, grants, and so forth, then coupled with our capital, there's an opportunity now to the economics to make a lot more sense. Mm-hmm. And when you see that, you'll see an uptick in the momentum around innovation.
Yeah. Yeah, it's a great opportunity. What geographies do you guys think? I know, Toby, you're part of a large global organization. What geographies are leading the way in terms of sustainability and innovation?
Well, we see some very interesting projects taking pilot, like offshore wind, off the coast of Europe. You see some momentum there. Obviously, there's been a lot more buy-in just generally from society in Europe, more than you've seen here. But we're catching up, no question. We are responsible for financing the largest offshore wind project now off Long Island. We are absolutely looking at the hydrogen, ammonia, clean fuels, sustainable aviation fuels, anything that's going to propel. We've developed an entire incubation framework now to look at taking a little bit higher risk, coming in during early stage with some companies that are not yet commercially scalable. That's really where we come in, and that's our sweet spot, right? That $500 million loan, that $1 billion loan, that's more of what we do. But coming in a little bit earlier stage, a little less capital, but being in the door with those clients as they're literally developing the next set of innovation needed.
One of the things I saw, I mean, agree with you, is that all the countries in Europe where the internet penetration was high. So if it was the 80s or early 90s, we would say which countries have the most internet adoption. We would say Sweden, Finland, Switzerland, Japan, Canada, Netherlands. And those are the exact same countries where we see a lot of ESG take off as well. I just wanted to call that out.
Yeah.
If I could just add, the EU is clearly leading the way. The US is catching up, and I'm seeing a lot of good, activity coming out of Canada. But I think where the most attention on this issue actually is in the global South, because they're the ones that are getting hit the hardest and they're the least responsible for it. So from a financial services perspective, loss and damage was a big topic at COP27, but that adaptation isn't necessarily going to go away. Even if we solve net zero tomorrow, there's still carbon in the atmosphere that's causing extreme weather, that's impacting these people. And we really need financial services firms to work with governments to figure out how to get them the money that they need to just survive, right?
Be more resilient.
Right.
Yeah.
And just to add to that, so I attended COP. We during that time period, G20 also overlapped. We made an announcement where we partnered with the US and Japan in the Just Energy Partnership transition with Indonesia. We supplied over $20 billion worth of grants and concessionary loans to literally bridge the gap from creating more affordable energy, moving them away from coal and into more renewable opportunities. And this is stuff that is absolutely critical, especially in the loss and damage. That framework was developed. The backing and the guts of that is not yet quite figured out. We'll see that in Dubai most likely. But this is something that just echoes exactly. I think that was one of the most significant announcements during that period just last month in regards to supplying dollars to the South.
Yeah.
And one last thing was, last week I was very excited with the laboratory work in California.
Yeah.
Where they use something like
very exciting
0.03 microjoules to produce 3 microjoules of energy.
Yeah.
And if that can be replicated outside the lab, and the US is a leader in this, using laser and so on, that was fascinating.
Yeah, really interesting development. Okay, so one last question for everybody. What is one innovation in the sector that companies should invest in to achieve a greener future? I'm going to start at the end with Stacy.
I'm going to say, if we think about insurance, which is where I sit, it needs to be taking the time to rewrite some of the risk models. They need to do it, and it needs to be an aggregated, collective view, I think, to really just shift the needle on the whole market. And I know pricing is going to probably not always be favorable, but I think we have to collectively, as a society, accept there's a change, it's coming, we're transitioning, and we're working together to make it better.
Yeah, it might create some motivation to drive towards more sustainable future. Toby?
I would say that it's kind of two pieces, right? So conservation, of course, right? Yeah. So keeping the afforestation. That conversation cannot be released right now. As you know, in Montreal, we just had COP15. It's still a very, very critical component to this entire transition. But secondly, as far as tangible innovations, I would say carbon capture and storage, as well as battery storage, is going to be absolutely a necessity for us to reach any form of net zero, whether it be 2050 or 2060.
Yeah. Stacy?
The insurance industry has definitely already recognized the need to move to a more preventative stance, right? We're used to, paying claims and responding to incidents and things of that sort. But how can we get to more of a position of preventing these things from happening? And so continuing to do that would be definitely a good investment. But from a climate and sustainability perspective, I think the opportunity exists to to partner with a lot of other industries to see what changes are coming, because insurance is the product that makes the world go, right? It's people could take risks that they wouldn't normally be able to take because of insurance. So there's a lot of risk to the innovation opportunities that are ahead of us. And so I think that means there's a lot of opportunity for insurance, and companies just need to get in the game.
Even in the carbon markets. I mean, that was a big conversation. Excuse me, that was a big conversation on COP27, was how do we insure these carbon markets? Yeah. And I think that's going to be a big avenue for revenue, as well as, just kind of really understanding what's necessary to get that market transparent and, and have investors feel confident in that market.
Yep.
I would say across industry, reduction of wastage is front and center. And out of that wastage reduction, how do you upcycle various things, right? This is applicable across industry. But where I would like to see the financial services take a lead is more with the small and medium businesses and priority sector lending. Those represent 80% of the GDP of any country. So that would be a big impact globally.
I'm going to do a little bit of a cheat. So I think what's illustrated here is that there are all great answers, but you have to kind of do it all. But I will give you an answer, which is an oldie answer. We've been talking about digital transformation since 2014. And at the time, it was very innovative, modernizing your infrastructure, trying to do the latest things with technology. We're at a really interesting inflection point now where the pressures from sustainability and ESG are giving digital transformation budget and purpose. And just doing the table stakes things like Stacy called out, you have to, and like the stuff you called out, you have to just get started and do those things. And technology will play a big role. And that's where the innovation is going to come from.
Yeah, it almost, as you guys were answering, it kind of brings me back to the traditional Horizon 1, Horizon 2, Horizon 3, starting with the kind of more innovation with a small I, blocking and tackling, and then thinking about, some of the more far out things that you were talking about around carbon capture and all of that. So this great answers, everybody. And thank you for the time. Appreciate it.
Thank you.
Thank you.
Thank you, Capgemini.